Hey everyone, welcome back to my channel. My name is Rian and Happy New Year. This is a new year, it's a new slate. It is your time to, just start over, and if you've made mistakes, I hope that you've learned from those mistakes and that this year will be a great year for investing for you. And I hope that you are safe. I hope that you are healthy. I hope that you had a good New Year celebration and all the best from my side. So let's look at what this whole year is gonna have in store for us. So the first thing that I want to talk about today is our battle of the dividend ETFs. Now, I've opened up those trades, those 10 dividend ETFs that I've discussed in my previous video. If you don't know what that is about, go and check that video out. So I've opened them up on the 31st of December, like I said, and they things are already looking quite good for them. It's very early days. Obviously, this is a one-year challenge, but let's quickly look at that. So you can see that I'm doing the experiment on my personal account, McLovin account. So if you go down, you can see here. So I've opened all of these trades, with $500, and you can see if you click on any one of them, you can see when I opened it up, it was on the 31st of December. Now, you can see that all of them are already doing pretty well, except for the VIG, the Vanguard fund. But this is not surprising, as a lot of the stocks that are held within the VIG ETF is also more. It leans more towards the growth sector and the tech sector, and that is currently selling off very strongly in the markets. And a lot of the other dividend ETFs, they have, or they consist more of recovery or value stocks. So that's why they are doing well. But overall, you can see, this is like this. We can see almost all of them. You can see that they are the ones in green. We have our leader here, which is the SPYD. It's doing the best currently. Currently, only one small dividend payout, on the dividend growth, the smart portfolio from eToro, only a small little payout here. It's probably one of the companies in here that paid out. I doubt that we would be able to see it. I wonder if I am able to see the fees section. Let's say customize. Let's just go for maybe you cannot have another something. So on this view inside a copy portfolio, you can't see the fees or the dividends on any individual stock inside the smart portfolio, unfortunately. But as a collective, it has returned, so far in like 7 days, it has returned $16. All right, so the next thing that I want to talk about is the rebalancing of the RT Invest copy portfolio. Now, what I want to do is I wanted to reflect more, of my convictions for 2022. Now, honestly, nobody knows what's going to happen in the stock markets or with crypto. My personal feel is that everything is it's way overbought. Like, I personally feel like we will get a correction, a retracement. I feel like the crypto winter is coming, but that is good news for us because it's like a sale. It's like your favorite stores selling their clothes or whatever at a discount price, and it is your chance to now go and get your average buying price as low as possible by following the dollar cost averaging strategy. Okay, now if you are a copier of the RT Invest portfolio, then this would be an ideal year for you to get your buying price as low as possible on all of the different asset classes that we are investing into. So I'm going to rebalance the RT Invest portfolio. Not a lot. I'm going to make a few small changes. So let's quickly navigate to RT Invest. So you can get to the RT Invest portfolio by searching at the top. And so if we look at the portfolio, you can see that currently, I have a breakdown. I have a proper breakdown in my one of my posts. But I'm going to rebalance it. But basically what I want to do is I want, to get my crypto exposure lower. So you can see currently crypto is around 16%. So I want to get it lower to about 10%. And I will do that by adding, more funds, by upping the exposure to the American stock market. So I'm going to be upping the total amount or the percentage on VTI and VOO. And I will also open up ETF trades on VTV, the Vanguard VTV, which is the value stock funds, and then also VIG. I want to get the dividend side of things up. Currently, the only two ETFs in the portfolio that are paying high dividends are the Charles Schwab high dividend ETF, and then also the VNQ, which is the real estate one. But I want to up that, and I want to add the VIG ETF to the portfolio, just to get us closer to that 2.5% dividend yield that I want the RT Invest portfolio to return yearly. So that's on the stock side of things. And then, by upping the amount on or the value of the ETFs, that will automatically push down your exposure to crypto, on the portfolio as well. And then just in terms of crypto, so what I want to do is I want to actually add Sand. So eToro recently added Sand, the Sandbox cryptocurrency, to the platform. Now, I made a video. You can go and check it out on my channel on my top metaverse picks. Now, Sand is one of them, and I'm very happy that the cryptocurrency has been added to eToro. So I want to make that part of the RT Invest copy portfolio. So you'll see currently we have Mana, we have Engine, we have Axie Infinity. So what I want to do is, and obviously they are selling off very hard now, all the metaverse coins, but this RT Invest being a blueprint for dollar cost averaging, this is actually good news for us, because now if you dollar cost average from your portfolio, at these prices into the RT Invest, copy portfolio, then, you in effect get the current prices. And if you just keep on dollar cost averaging into the RT Invest portfolio, you would actually get to the point where, your buying price is very close to the current prices. And, that will just set you up for success as soon as the crypto winter is over, and we will see massive gains, in the future. So red means good news currently for us. All right. So you will see that, by adding Sand, we will have all the main players. But I want to make it part of this portfolio. And I think then this portfolio will be well balanced, and it will be, just be more, or percentage wise, it would be well hedged. It will be diversified against, or across multiple asset classes, and also being more towards value or recovery stocks, as, like the tech sector. I still have strong conviction for the tech sector, and I believe that they will keep on growing, especially in the age that we are in now. But I also feel like, value stocks or the recovery stocks, will play a big role. So I just want to kind of get that balance a little bit less on the growth side, and then get it more towards the value or recovery side of things. So I think that would just set the portfolio up for whatever hits this year.
2,000 years later.
So then lastly, let's look at some of the changes that I have been making on my personal account. So I've been closing out a lot of the open or the single stocks. I've done some tax loss harvesting before the end of the year, and so I'm only now left with these few single stock positions. Now, some of them I do not want to ever sell, like Tattooed Chef or Corsair, but the other ones I would want to close out as soon as they are in profit. Now, I currently don't have, or I don't plan on buying more, or putting more money into them, so if I had higher convictions, or the best thing now would be to actually just, put in another $1,000 in each, and then it would only have to go up ever so slightly before I can get out of them. But for now, they don't bother me. I'm just going to leave them until, they turn green. You can see that most of these, they are heavily shorted stocks, like Corsair, PayPal, Tattooed Chef. They are some of the most shorted stocks by hedge funds, and I'm not sure where all the selling pressure is coming from, but a lot of these stocks are heavily shorted. But that will not last forever. I mean, that too shall pass. And a lot of these companies are like just heavily oversold, like Robinhood. I mean, look at this. It's trading at $15. If I just look at the chart, just look at where it came from. So it was trading at over $70. not like what, August, and now it's like at $15. So this is probably one of the best buying opportunities that you can ever have on a stock. So that's why I'm not going to close this. I'm not in the business of buying high and selling low. Like I can wait it out. I have a lot of patience. If it takes a year to get into profit, then that's what I'll do. But some of the single stock positions that I did close were ones that like I've lost conviction in them, and also they've served the purpose of tax loss harvesting for me. So my gains basically offset the losses that I took there, and it was worthwhile for me to close them. But these ones, I have no intention of closing them, so I'll just wait it out. And then, like I said, I've opened up our dividend growth ETFs for the experiment, and also this serves a dual purpose. Like I said, my overall conviction is not as much in the growth ETFs. You can see just how strongly these ones have drawn down. Look at the Russell 1000. It's just been taking a beating the last few days as well. So if we go to maybe the 4-hour chart, look at this. So you can see it's been down. We kind of have this double top here. So I'm starting to think that we might enter the bear market sooner than we expected. It's just a feeling that I have. Nobody knows what's going to happen in the markets, but I just feel like the growth has peaked. Something inside me just says it has reached its limit. It's been trying to break through the ceiling for so many times now. Look at this. It's just trying to break through the ceiling, and it just cannot do it. And I feel like it's just reached that point where I just feel like it's just going to be pushed down. The resistance is just too much, and it's just going to go down. So that's my feel, especially for the growth sector. So that's why it's got a dual purpose for me to move a lot of my money, $5,500, which is about 20% of the portfolio. So I've just in effect moved 20% into more value or recovery stocks, companies like Coca-Cola or all these other big companies that's been around since forever, and especially also dividend ETFs usually contains companies like Walmart or these big companies where it's companies that does well in a pandemic. It's companies where let's say, take for instance Walmart. People would always need to buy food, so it's not like they are directly impacted or such or so highly impacted in a pandemic or in a time of recession or depression. So so by shifting a big portion of my portfolio into stocks or ETFs that's made up of recovery or value-based stocks, it just feels to me like a good hedge for this year. And I will continue to try out new things. I will continue to invest into things that are changing the way or just the way makers of life, the companies that are changing the direction of our future. I will keep on investing in those. I'm a big believer in crypto and in all of the new technology things that are happening currently. But I have to hedge my portfolio as well. And it seems like in 7 days it's already starting to pay off if you look at this, which is quite amazing. All right, and then obviously I have the crypto, the metaverse coins here, Mana, Engine, Axie, and Sand in my personal portfolio as well. And then also I opened up the eToro cryptos by market cap. Now I made a video on this. You can go and check it out. The video's name is our own Bitcoin ETF. Well, that video is just an explanation of the amazing smart portfolios on eToro. And this smart portfolio is basically opening up. It basically contains cryptos by market cap. So if you look at this, you can see the top holdings are Bitcoin, Ethereum, Bitcoin Cash. You can see all the big players here. And it even reflects the metaverse coins like Mana, and you can see some Axie and Sand, Solana. You can see all of them in here. So I've opened this up to just get a little bit more of exposure to crypto. So I usually like to open up my own positions, but in the spirit of trying out these revolutionary products of eToro, I've decided to open up the copy portfolio and see, just see how that goes as well. So basically, I will just continue to dollar cost average into the RT investing portfolio, as soon as, I've made those changes to the portfolio. So what I'll do is I'll just continue adding money onto, my personal account, and I will keep on dollar cost averaging by just adding funds. You literally click add funds. You literally, select $250 as a minimum, and you remember to keep this box, copy open trades, and, like this, and you click update, and then in effect, it will go and open up all of the trades on the RT Invest portfolio for you. And, the more times you do this, if you do this, 2 times a month or 3 times a month, you just get to buy into all of the different markets and assets in the RT Invest portfolio, and in effect, get your buy price as low as possible for maximum growth in the future. But that's it from me, guys. Watch out for the next video. If you like this kind of content, please consider subscribing to support me. And then also, if you are new to eToro, you can find my sign up link in the description down below, and also give this video a like. And please comment anything else you would like to see me make videos about this year, something that you would, you're unsure about on eToro, etc. So just anything, write them in the comments, and I will see you in the next video. Thank you. Bye bye.